Now let's talk about Jeff Bezos, one of the richest guys in America. Before Amazon, he was actually an investment banker, no different than you, doing his analysis, finding the opportunities, creating investments. He acquired Amazon as a online book vendor back in 94. Now, this was a dot-com stage, and companies were going public based on a business plan, not a whole lot happening. But the value of these internet bubbles was astronomical. One of those times that the professionals were saying, throw out the rules of the old business valuation. Bezos started at about that time with his first acquisition being Book Pages. Guess what? This Book Pages business related to his online book sales. I call this vertically integrated business. The ability to buy other businesses that complement your primary purpose. To use myself as an example, I would call it vertically integrated because I'm trying to buy other businesses that relate to my singular goal of helping you raise more capital. It's also the Bezos model with Amazon. And you know what? They've continued to scale. They've continued to grow. Now they're not a book vendor. They are the biggest vendor of absolutely everything in the entire world. They are a great logistics company that they actually got those capabilities from the acquisition of Zappos. And they've continued to grow with the latest data I have was from 2023, but there was their 116th acquisition. They have been growing by doing a roll-up, buying businesses that relate to what their ultimate purpose is. And now there's a different way to do it. I call them the horizontally integrated business. With that, you're buying different brands, different opportunities that may be geographically different. Like if you have a construction company is very localized. Well, if you're buying construction companies in Texas, Florida, California, they can all be named something different. They all can operate same but different. But at the end of the day, they're just geographically different. So it's more of a horizontal integration. Now, if you have that same construction company, but now it's buying a roofer, a plumbing company, an HVAC company, all within the same market, that's where we start talking about more that Bezos model of growing the business. Now, I'll use this example, the Yum Brands. Yum Brands, it was actually a fast food operator. While it started under PepsiCo, another brand buying business, it spun off in the 90s, but even today, it is operating different brands. A lot of franchises where they both own locations as well as franchise to others' locations. And today they're operating KFC, Pizza Hut, Taco Bell, the Habit Burger. I don't actually know where that is. However, 43,000 different locations between all of their brands. They're buying different brands, different product lines, all within the restaurant space. But sometimes they're doing it through franchise acquisitions, or they're just opening up their own business locations. And just to speak on franchises real quick, I'm a fan of franchises. It is different than a securities offering. However, it is a strategy to grow and build your business geographically, where you can have different stores opening up. And guess what? For those are paid for and run by franchisee that have a vested interest in seeing the success of that location. It is not a securities offering. With Crowdfunding Lawyers, we teach a lot about what securities offerings are, But the classic test being you're really raising capital from passive investors that are looking for profits with franchisees. They are active investors. They are actively operating. So it doesn't fall under the same rules and regulations as a securities offering. Now, what makes the most sense, whether you do a vertically integrated roll-up strategy or a horizontal integrated roll-up strategy, it doesn't really matter. At the end of the day, you are building a business. It really just depends on what is your passion and what is your goal. Hopefully you find your ikigai, where what you love to do, where people will pay you, what the world needs and what you're proficient at. It's called your ikigai, and that's really where to focus your roll up. But how deep do you really want to go with this, and what are your goals? Because one option is like the boomers. Maybe you're building your business so that you can hand it off to your kids, your grandkids. Or is what your goal really to be is to build a business to a reasonable scale and then try to sell it to private equity. Great way to have more of a limited time with a specific goal, that if you're doing it through a business acquisition strategy, you're buying businesses at 3 times earnings and selling them at 10 to 12 plus times earnings. And that's ignoring the business growth that any skilled entrepreneur should be able to build along the way. Now, if you want to be that billionaire worth $100 million or more, the uber wealthy, now you really have to focus on going public at the end of the day. 100%, it just comes down to how big of a business is it? Do you meet that at least making $15 million in profit? And you can accomplish this through your own acquisitions, whether they're small acquisitions or as you grow bigger acquisitions. But if you can roll it all together where you have this profitability level, all of a sudden the public markets get to be more interested. And that's where the true uber wealth has always been made. It does come down to this exit strategies and being able to go from the owner-run business, we all started there, to the professionally run business, which is really required once you start buying multiple businesses, to hitting a level that either you want to sell out to private equity, because private equity is doing the exact same thing of bundling businesses together to ultimately be able to go public. So those are truly, here's your strategies and here's your opportunities if you want to make it all happen.